All right, happy Friday to all you devils out there. Here we are. Oh, it's the 16th, a little after 1 here. I've got 4 assets here teed up. Well, of course, we'll look at Bitcoin, Ethereum. I've got the NQ and then Amazon as well. All right, let's just dig in here to Bitcoin now. Not a dramatic change here. Nothing that would change the Elliott count here. So I'm going to start with just market structure, which is very much what I'm trying to do with members here is just offer you a solution here where we're combining market structure with Elliott because they blend so beautifully together here. So we can look at this and you can almost see the Elliott count, right? But as we look here, note I've just drawn a couple of trend lines here, just working off of some of the angles that are available here. So the question continues to be, if I grab my little line here, right? Is this 1 2 1 2, right? Or is the whole thing just a big 1 and can I do it? And we're doing the 2 now, right? So you can you can make a case for both, right? There's no way to be definitive about it, sadly, because this is a little sloppy here coming off of this low. It's a little bit of a we get a lot of congestion up here. It's hard to be definitive about the count. We know that there's an impulse, right? There's definitely an impulse here. Whether it's 1 or 2 impulses, I guess, is the big question. Let's get that off here. Well, we can look at a couple of things that, again, in the interest of keeping things simple when we can. Well, a couple of things we can just look at. Well, here's certainly a candidate for a completed impulse retrace. A little sloppier, only because it's hard to get a label on the 2, right? With this clearly 4-ish, 5, right? So is this okay, right? Are we going to go impulse retrace, right? So this would suggest that we're just in the process of continuing on in a bullish trend, right? Higher high, higher low, higher high, higher low, right? So the expectation would be that if we hold here and as we sit right here, hitting the obvious, anyone can spot this, right? We've got a demand zone here. Now, just because we're hitting it, just because we're getting it about, does not mean we can't break it, of course, right? So, but it's doing pretty much what you would anticipate. Oh, okay, well, we're into some demand. Now, okay, are we going to come up and then just roll over? Well, remains to be seen. But right now, I don't think there's any reason to assume that this trend wouldn't continue and we'd get a new high here. Now, you may get a new high here, run right into this supply here, and that may be all she's got. Remains to be seen, right? Now, one thing we can all agree here is that we have for bulls, it's a little tear in the eye as we see risk assets just exploding, just absolutely vertical. And Bitcoin's not running with it. So that's a little discouraging for bulls. And as a result here, people bitch at me for only doing bull counts because I'm a bull, right? I'm long, I'm strong, I'm not selling. You pry it from my cold dead hands. I'm not selling, but when we certainly it's reasonable to look at a bear count here. I get a lot of comments. People saying, "Quit with the bullish crap, right? Just can we get a bear count? Bear count. Bitcoin's going to 12. Bitcoin's going to 10." I get a lot of those comments. Well, in fairness, let's go look at it. Well, so here as we sit looking at this with regards to market structure, well, okay, pretty obvious supply, right? As we look here. Obvious demand right now. Again, we're just right halfway here. We can see this. It's actually not as strong. The demand zone down here is stronger because we see the imbalances that came out of it, right? So as we come out, imbalance. Now this, you get one here, but it's already been mitigated, right? So see if I drew it here. So just to understand, right? Yes, there is one right here, but that's already been mitigated. Right, as in tapped into, any unfilled orders there, anyone who was trying to get long, well, they had their chance, right? So now we come down into this demand zone here, not as strong, but you'll note here we're right at the 200. That's the 200. Again, I feel like I have to mention that. That's the God MA, right? It's the average of the EMA and the SMA, right? That's why I like it. Not a replacement for the Vegas wave, but just kind of a proxy for it. Just frees up chart space. Simple as that. Okay, so until we get some resolution here, either we're coming down lower. We Elliotticians here, we continue to be wrestling with, is it 1 2 1 2 or 1 2, right? There's no way to I mean, we can all have an opinion about it, right? We can all put our own counts on. But really, if you want to be, covering all of the scenarios here, which is as technical traders we'd want to do, certainly you'd want to have both of those counts as alternates, right? So whether it's 1, 2, 1, 2, right, remains to be seen. Now, the other alternate, which we're going to look at, which we've got to consider, is that rather than being 1, 2, 1, 2, it's ABC. Can't eliminate it, right? So all of this coming down here, the implication would be we're coming down to take those lows out, right? And we'll look at that count in a second. Well, here we can just see here now, again, just in the context of trying to keep it simple, right? So here's the swing low, here's the all right. So keeping it simple. Here's the low, had a job to do, break the structure, give us a new high. Right, did its job. So here's thus the strong low. I should note here I have the Sonar Labs indicator suite on the chart here, which is an assist for market structure. Certainly you can do it yourself, right? Many people do prefer it. They prefer to do it themselves. This is a great learning tool if you're interested in market structure but you're not clear on all of it. This can be a great guide. I mean, it's doing it for me, right? It's putting on the fair value gaps. It's putting on all the premium, the discount, I've got equal highs. I've got breaks of structure. I've got IBOS, internal breaks of structure. They're doing everything for you, right? So if that's of interest to you, in addition to developing Elliott skills, well, I can't recommend them any more highly. Right? We do have a little arrangement with them because we work closely with them. In our link tree, maybe under this video here, I think I put both of them under there. But if you wanted a little discount on their pricing, we've got a little discount code in our link tree. You'd see that if you clicked on that and get you 10% off the monthly. It's pretty reasonably priced for what it's getting. And a lot of times people might try something like that to get clear on, okay, I understand. I see how this works. And then, then if your preference might be to just do it yourself and save the $59 a month. Not unreasonable, but a great guide, right, as you're learning it. I know it's been helpful to me as I've really taken a deep dive into this. Okay, so that said, we have ambiguity, let's say it that way, in the Elliott count. But as we sit here reacting out of this demand zone here, and we can see now we've got our measured move indicator, right? There's no reason it would be, I think, a bit. What's the word I want? Not reckless. Oh, shit. What do I want? Short-sighted, maybe. To make any sort of assumption here that with a swing and a retrace right to the golden zone, right to the zone here where we have both demand as well as a split between the 50 and the golden zone, there's no reason to assume we aren't just going to carry on to that target. That's about, I've shown, I don't know, again, how many times have I shown this, right? 50,000 times. Why would you assume no, right? I started nibbling here as I said I would, right? 24, 25, right? And recognizing we could go down lower, right? There's a stronger order block or demand zone here again. I don't like that language, right? Just it's a demand zone here. Order block is open to, people can interpret it differently, right? But so here we've got demand, right? Which we can recognize because of what came after it. So if we're going to break lower, well, as long as we stay above this low, right, we stay in the potential uptrend. If we break this low, now things are getting ugly, right? Next target will be that low. So as we sit here, again, I know, right, the background of, the SEC issues with crypto, right? They're trying to push U.S. traders out of the market. We're not getting many choices left here. As they're attacking now Coinbase and Binance. I thought I saw yesterday that Robinhood is now taking market share from Coinbase. I suppose that's not surprising. Again, what am I trying to say? I guess what I'm trying to say is, why would you not take this trade? Right? Why would you not take this? All right, let's. I'm out of log scale, just FYI. All right, so there. What do we have here? If you're going to use the golden zone. Here we use there, and there's a target. Okay, well there's 3.5 to 1. Not good enough for you? Skip the trade. I think that's pretty reasonable, and it's not like you're looking at this going, well, I'm just taking a flyer, right? It's completely technically valid. Now, you may have a bearish bias, and one of the people who like to comment every week that, oh, you're so wrong, Bitcoin's going to 10, 12, 0, right? I get a lot of that. It almost doesn't matter, right? Here, you've got a technically valid trade. I was kind of going off on this on the live stream this week. It doesn't matter. As long as you continue to structure trades here that are technically valid, right? So I'm not saying just be a cowboy and just, wing it, right? Oh, 3 to 1, 3 to 1, I'll take it anywhere. I'm saying, okay, does this make sense? Right? Again, I've been using this kind of as an example. If you're reviewing your trades at the end of the week, month, year, date, whatever it may be, and you set this and say, here's the trade, and you took a little screenshot and you put it in your trading journal. If you get stopped out, when you come back to review it, are you going to feel like, oh, what an idiot. What was I thinking? Probably not. That's a very valid trade. Perfectly valid. My point is, you got to disconnect a little bit from the, oh God, I really need this one to go. It's I like to say, it's just another trade. Right? If you need it, right? I feel like I repeat myself here, but as an educator, you find yourself doing that often. If you need the trade to go, probably not going to go if you need it, right? So you don't want to go heavy here. You could have been waiting, right? We've been talking about, getting to this level for, God, feels like 3 months. Oh, okay, we finally got there. Now, this is not the place to, I mean, you can take some risk here, right? This is not the place to be a pussy, right? And say, oh, fuck, I don't want to get stopped out, right? It's the trade. If you're a little scared of it, that's all the more enticing. But ultimately, it's not whether you're scared or not. It's what's the impact if the trade gets stopped out? Is it a account wrecker? Well, only if you put yourself in a position to allow that to happen. I like to continue to preach this mantra. It's just another trade. Disconnect from the outcome. If it gets stopped out, okay, next one. Right? As long as you continue to do things where you get minimum, right, 3 to 1, right? We can refine this down even more. I mean, I could get that probably to 20 to 1. If I go down to a 30-minute, dial into that, and we do something. Oh, Jesus, I could probably do it right here, right? If you had taken it right there, there's 26 to 1, right? Well, essentially, all I've done is just lower the stop. Here, let's go here. Let's make it a little more. There's 15 to 1 to get in there, right? Could you have done this trade? Like you take the break of that body here. Now you're going to put your stop right underneath this wick. Too tight? Well, maybe if you're a little gun shy, right? You're not comfortable with that. Well, now we've got 14.5 to 1. It's just a question of, okay, so what would that mean? Well, it means you could go with more size if that was important to you, or leverage, whatever your preference is here. Note here, I'm on BitGet as they're our sponsor. I'm in spot. So that's just personal preference. Do you want to go for one here with leverage? Well, tighten up the stop. Do you want to give this room to breathe under the 65, right? It's just really, right? So if we break the 65, we're breaking the order block or the demand zone. We're down. So if we break this one, likely we're going to this one, which is why I drew that trend line here. See, if we do that, okay, think about it. If we're going to go down there, now where we are, we're at the lower golden zone. Let's take this one out. And that could be the golden zone holds it. Could be that they wick through to grab the demand that's down here. Because what do we know without any question is sitting right here? A bunch of liquidity, right? We all know that, right? So there's a bunch of liquidity down here. So if we start to roll over and come down here, the market's going to want to go for that. If they can't get it, right, it's all the more bullish. Just like here, I promise you, bears were trying to get that low. Here, right, they came down. They got the lows here, up. Couldn't get it. What comes after it? Let's see here. Make sure I'm right on that pivot. I don't think I am. Get you right on that. Okay, let's pull back out. Interesting, right? If we do come down here, okay. So now you got to think about it. Wait a minute. Okay, well, if I'm going to put a stop, if I'm going to take it here, I don't want to put a stop down here. Now, if I'm using that as a target right now, now you should feel like an idiot if you did that. Why? It's only 2 to 1. Well, maybe I shouldn't say it that way. That's a little harsh. A 2 to 1, I would propose to you is not good enough, right? If you're swing trading out here, I'd encourage you to consider something more like, well, there's 7 to 1, right? Let's assume you're buying it right now. Stop under the low of the demand zone here. First target, right? Assuming that we're just being moderate on the target here. We're assuming we're going to break the supply up here and go get the algo target, right? So the algo is going to drive it. Safe bet, right? So what do we got there? Just under 3 to 1. Just under. Still acceptable, I think, right? Again, if you're reviewing your trades in the trading journal and you're looking at this going, I did a 2.98 to 1. Okay, a little more risk, right? So what does that mean? You're going to have to probably reduce the size, maybe reduce the leverage. Maybe you're just putting in as I'm doing here, I just took a piece here, recognizing that if it starts to come down, I'm perfectly comfortable averaging down as we head towards this lower demand zone here. I'm perfectly comfortable, right? I made that agreement with myself. If we're coming down here, I'm okay with that. I'll take the drawdown because my view is just, again, I'm a bull, right? So, so if we look here, I'm trying to keep you focus on what if you're wrong? What's the impact? It's easy, right? This is how much were you going to make? Well, first thing you got to remember that if you get in and this starts to go, right? This is where good traders and mediocre traders separate. How much when we get here, what are you going to do? Right, you can see what could happen there, right? You could see this could be a liquidity grab right ahead of a supply zone. You can see that happening. Okay, well, if it does that, if we start to push up here, well, then a little bit of Elliott might factor in. Well, wait a minute. If this is 1, 2, and we go up here and we start to retrace, well, the first assumption right there is that we're going to stay above this low, and then it's going to be an internal retracement. Now, we could come right down to this trend line and then launch from there and still have an internal retracement, right? That's, again, as I like to say, it's all the market can ever do. That's all it can do. Right? We swing, we retrace. We either stay within the range or we break the range. That's the only, that's all that can happen. So, the whole thing of trading can be simplified down to this, right? It literally comes down to nothing more than this. Okay, we get a push, we get a retrace. Now, internal or external? That's it. That's trading. That's all there is. Right now, as to how we analyze whether it's internal or external, got 20 million different ways to skin that cat. But that's all that can happen here. That's it. Well, we could go down, we could wick the lows and then go, right? But it would be a break. Then you'd have a new range, right? Then it would be this range here if you wick the lows, right? Then we're here. We're saying, okay, I got a new range. If I'm coming back, internal or external? Right? Am I going to go external or am I going to stay internal? If I'm internal, right? I mean, it just goes on. It's just over and over. If I go internal here and I come down, what's going to happen here? Am I going to go internal or external? Am I going to go external or am I going to stay internal and go up and take the new high? That is it. That is all trading. That's all the market can do ever. That's it. Right? Internal, external, right? Which is what I was lucky. I had a great mentor, right? And he just drilled that into my head. Internal, external. What are we doing? Is it internal? I mean, you can start to break it down that way. So the reason I emphasize this, not to bore you, but to counsel you in the context here that the reason market structure, I think, helps clarify the internal, external. How do I know? Is because you get a framework that's based on logic, again, and trend establishment, right? I mean, we've been defining trends, higher highs, higher lows, since people were drawing charts in the sand, right? I mean, that's it, right? A higher high, higher low, higher high, right? So right now we got higher high, higher low, higher high, higher low. So now, of course, to create the retracement here, we got to have lower low, lower high, lower low, lower high, right? Do you see it? We just rotate, right? So the swing going up now as we come down. So we need a bullish swing structure here, which we get, followed by a bearish swing structure to create the retracement. So it's just bullish, bearish, bullish, just over and over, right? Now, I mean, not to make it sound like, oh God, well, this should be easy, right? Of course, this is, as I like to say, this is the hardest easy money you'll ever make, right? It's not easy, even though we can simplify it down to internal, external. That's all it can do. Right. So okay. So now the question becomes, well, what kind of tools can we use here? Well, that's where we come back to here. Just a little market structure. Well, what's the right higher high, higher low? What's the last thing that happened? Here's the low. It broke structure. So this is the strong low. This is the weak high because it has not. For that to become now the strong high, it has to break this low, right? So we can look here and say, based on what I can determine here objectively, not based on my opinion, not based on something I read on Twitter, just objectively, here's the low, here's the high, right? So right now I have a strong, of the two, you get probability. The probability is, since this is the one that last did its job and gave me those breaks of structure, if we come down here, what odds are that we go external, right? That's it. It's not certainty. It's not guaranteed. Just probable. It really is that drop dead simple. Now we're doing this out on the daily, right? So I'd go down to a 4 hour. Oh shit, I think I have, maybe I don't. We go down to a 4, let's go down to a 4 hour. Right? Right, it's kind of nice, right? The Sonar Labs tool suite, right? It just goes right with you as you change, right? So it's doing it on the fly as you change time zone or the time range or the time zone or time frame, whatever I'm trying to say, time frame that you're trading on. Okay, well now here, look, I've got an order block here, but it's not quite as good because even though it gave you it gave you fair value gaps on the other side of it, they've all been tapped into, right? They're already mitigated. So, you want to do the whole thing here? Maybe a bit much. We're going to come down here. Well, let's just look here. We can kind of see what happened here, right? It's not hard to deduce what likely happened here. Here we have a bunch of equal lows. Down they go. What is there any question, right? That there were here. We've even got the Sonar Labs will even give you a little tip here. There's likely this is inducement, right? So lows are grabbed here, stops are run here. Well, again here. Why would you think that? It's not so much anything other than, well, look at the extreme move that we got out of here. So it makes you think like likely what was happening here is a bunch of stops were run. Now we got to go back the other direction because if they were going to keep going, right? You can kind of look at this and say, well, okay, this could have been a 1, 2, 3. Oh, if we're coming back here, why don't we go down? If bears are in control here, well, all of a sudden, oh shit, look, I'm blowing right through. Let's get. I'm blowing right through. Here's an order block here. Pardon me. I have to catch myself. Here's a supply zone, blown right through it. Well, you can probably guess what's here. Right? Swing, golden zone. First, second, we're going to get third. So do we have a 1, 2? Right here. So this is a good example here. You see this huge imbalance here, right? Fair value gap from here to here, right? Completely absorbed. Right? So the imbalance that was here as they ran the stops, right? Boom. They come right back here. Now, what do we have here? We don't have, this bar is not finished, but there's the potential here. If we're going to hold up here, we'd have more imbalance, right? Again, we're not done with this candle yet, so we don't look. Let's wait and see, right? Just a reminder, right? This candle is not done forming, but we've got what looks like could be here. We might have another fair value gap here. I should probably change that color. All right, so something neutral here. So we've got another potential fair value gap right here. So meaning, right, if this is going to go 1, 2, 3, well, whenever we get a pause here, let's say we go to the 50 and we come back down, right? Reasonable to think you could get a little kick here. Now I got a 5. Right? So it looks like, oh, you could probably make it, oh shit, we can do that. That's a little sloppy, but you probably got a 5 here, right? You probably got a 1, 2, oh yeah, I have to measure that. Right, it looks like you might be able to get it. Let's just make sure 3 is not the shortest. Yeah, we're good. So 1, 2, 3, 4. It would be a diag, right? But it's a 5. 1, 2, 3, 4, 5. 1, 2, 3, 4. I don't have this yet, but if I get a 5 here, well, now I've got some building blocks, right? Can I clear this second second supply zone here? Can I clear this? Well, look as we tap into it. Let me get my stuff off of here. All right, as we tap into it, right. Okay, right, reaction. We come down here. We got here's the fair value gap. Here's the fair value gap down here. I can't call this a demand zone yet because it hasn't done anything. You have little micro breaks here, but we don't have any major breaks of structure, right? We got to get up here to flip on the 4 hour to flip to a bullish count. Just look at it. Lower, low, lower, high, lower, low, lower, high, lower, right? Lower, trend is down, right? It's not too hard to determine what the short-term trend is, down. So to get on the other side and reverse it, we got to take out the strong high, right? That's the trend change, right? So until we do that, I mean, you can continue to make the case here. Well, everything you're doing on the bullish side is counter to the larger trend. But if we're ultimately going to turn around, I mean, any low always starts counter to the trend, right? Now, so if you want to be more conservative, you could wait till we break this, because what's inevitable is probably the wrong word here, but highly probable is that if we do break this, right, that would be a break of structure. What happens after a break of structure? We anticipate the retrace, right? That's the whole idea behind it, right? So here's a change of character, retrace. Here's the last change, retrace. Right? So as we take out these pivots, the retrace is what you're anticipating. Here's the last at the higher degree, change of character, retrace. We change character down here, retrace. We come down here, up here. Now we're going to hold here. We're going to break here and get some internal swings. Well, this is pretty juicy to the market right here. All right, we got equal highs, so that's a liquidity grab. I got them up here as well, right? So this is, again, the Sonar Labs indicator suite. I've got buy side. It's telling me where the liquidity. If you're not sure, God, where's the liquidity? Well, here it is. Here's inducement. Here's an IBOS. Here's the swing low. It's laying it out for me. So what's the next thing I'd be looking for from swing high to swing low? Well, of course, where's Waldo? Right, we got to know what the algo did last. I think we already looked at this, right? Oh, that got a wick through if I'm spot on. Looks like that's a tick through. We don't make the target. Interesting. So what if we don't make that target? Oh, let's use this because this is what where are we now? I mean, coincidence? You tell me. Coincidence? Looks like this could be interesting. Looks like we went here. So you see, we went here. It's this algo. It's the same thing over and over. Here's 50. Here's the target. Right now we have a target down here that's unhit. Right from this one, unhit. So we're going to go up here, bang this one, and come back down, get that target. Remains to be seen. Okay, how does this help me? Right? I mean, I know that's what you're thinking. Like, oh fuck. Okay, all right, I get it. Right? Okay, that's all. How does this help me now? Well, that's kind of where we were, what I was trying to give you some ideas on over here. Can you take that trade? Well, you're already a little bit late. You're already late. All right. I mean, we've been looking at this for, when did we do that? April. A couple of months waiting. Like, maybe we'll get to that demand zone here. Maybe we'll get there. Well, there we are, right? Did you buy it? Again, this is not financial advice, but if this is an area that we can identify as possible demand, it's not a bad thought, right? Again, assuming that your risk controls are reasonable, right? That you're doing something, you're not risking 1-2%, right? That's pretty standard. That'll serve you well if you keep it at those levels. But the key to that 1%, 3% is that when you get a little bit ahead, you can't just go, oh, fuck, I needed that profit. Oh, I'm going to take it. You gotta allow for the 3-to-1 to hit, because if you keep saying, shit, I couldn't wait, man, I had to grab some profit. If you keep doing that 1-to-1, 1.5-to-1, you need the 3, 4, you need the big ones, right, to offset all the little losers, because I can absolutely guarantee you, I don't care who you are, you're gonna have more losers than winners. Period. You will. So how do you deal with that math? You gotta have a few big winners, right? What can you never, ever, ever allow to happen? Big loser. What happens every day? People get blown out. Accounts get liquidated. It happens every day, right? It's just all self-inflicted, right? If you get, it's like saying, I've used this analogy many times. I'm going to get in the ring and I'm going to do a little boxing, but I'm certainly not going to get hit. I'm not going to get hit. I'm just going to knock him out in one punch, right? That's essentially what you're doing if you're putting on too much risk here and you're just putting a stop way down at the prior low. I mean, again, assuming you're trading with leverage, right? Okay, all right, I'm kind of rambling. So let's move on here. I do have the Elliott counts here. Let's put them on. I'm on the daily. Oh, shit. I thought I had them over here. Oh, do I have them over here? No, I don't. Hang on, let me find them. All right, found them. Okay, so bull count 1, 2, 1, 2. Right, where are we looking for a 2? Between the 50 and the golden zone. What's right there? Demand zone and the 200 dynamic. Right, so reasonable place to be thinking. Okay, 1, 2, 1, 2. Right, that all flies. Right, based on the idea here that this is the highest degree 2, and this is all just part of the push higher, right? We think about longer term, that we've got a hard low here from the COVID. Oh shit! From our absolute low, I think that's locked. That's locked. So we've got a hard low here from the no shit. Let's see. Let's go to a 3-day. All right. So this is the 1. This is the 2. This is out of log scale. Right. You got to get in log to make that make sense. Right. 1 WXYXZ. 1, 2, 1, 2. Now you can see out here how at this degree it's not unreasonable to look at this entire thing. You could count it as just a 1 or just a completed impulse, right? Maybe not necessarily a 1. You could see how you could go 1, 2, 3, 4, 5, right? You could do it, and this is such a funky swing, let's call it that, right? Let's not give it a label just yet. It's such a funky swing that it kind of defies certainty on the Elliott count, right? But because there is a clean impulse to get you here. So 1, 2, 1, 2 until proven otherwise. If we start to break down here, well then obviously we'll come back to this and we'll be able to relabel. I just go over to the bear count. As it sits right now, I'm going to hold with this as my primary. It just means it's, I'm a buyer down here. I hold as my primary until I'm forced to change that. Now let's go to the bear count here. So I'm trying to get better at this. Okay, so those are all gone, right? So you can see now, take the Elliott out and we're back to just swing structure. Let's look at the bear count, right? Everybody's bitching I never give you a bear count. Well, here's your bear count. WXYABC, right? We've looked at this a couple of times here, and you can't eliminate it, right? You just can't. So ABC, right? Now, is it the ideal X? This is a little far for the C, but it's certainly valid, right? We could have an ABC there, right? The diag. The little complexity here. We expand the B and then we go up, and then that's where you're looking at this as 1, 2, 3, 4, 5. Well, so looking right there, you can see the supply zone here. So we've just tapped into it. Oh, and this is the more bearish scenario here. If I get right on that, get right on you. Right, so we come right up to the golden zone. Now we're coming down. Here's a potential another golden zone. Here's I had somebody last week who just was going off on like, oh, Bitcoin's going to 12 grand. Well, here's likely how they got to that. Or actually, I don't know how they got there, right? Whatever they're doing. But that's not an unreasonable projection. Now, what has to happen to get there, right? If this is an X, we need 3, right? Oh, maybe it's deeper or something like this to get there. ABC. These were a little funky. can't eliminate it. All right, there's your 12K. All right, so to that guy who likes to, what does he want to do? He could comment bomb my stuff. There you go. That's how you'd get there. And then you'd be back here. If we were to do this, well, this is how we'd count it. This would be, because you can count this as a C, and we can go in A, B, C, because this is always for me, right? This is as an Elliott. When I put my Elliott hat on, come here, goddammit. This is a shitty finish. All right, for all of this to finish with this tiny little AB, I mean, a lot of very skilled Elliotticians. That's how they've got it, right? It makes me, I feel a whole lot better, right, when we're breaking up above this, right? Okay, that was it, right? A little weird, but that's what it was. Too soon to call it. So you could certainly look at this and say, well, just stuck between two golden zones. Whichever break. Now that's the secondary golden zone. This is the big one, right? We break between these two. Here's where we're going to define where Bitcoin's going to go next. We break this one, we're likely going down here. We break this one, we're likely going up here. Likely. I'm not forecasting. I'm just telling you, likely. All right. That's all I got there. Let's pop over here to, let's go to Ethereum here real quick. All right, we'll stay on crypto. Same thing, right? So here's the market structure. Here's our demand. Here's our supply, right? We just tapped into it, right? It's working off of the last little supply zone here that led to all the breaks of structure. Here we come back, tap it. Just miss it, actually. I mean, that's fairly refined, but we are on a 4-hour now. So the question here, this is actually, I think, a little bit easier to count. It still gets a little funky up here, and we've looked at this, right? I think everybody can agree that this is a little... Any Elliotticians have a lot of conviction into this count? Well, you do get a little 1, 2 here, 3, 4. It looks like you get a 1 here. Skinny 2. 1 doesn't work, right? It doesn't. It's a little bit iffy here over here, right? So it's just you're not getting the kind of, well, it's not a bad start, right? 1, 2. What do we got, right? Is it 3, 4, 5? Is it 3, 4, 5, right? And we go into a 2. Well, and now you got the same kind of shitty 1 here. All right, so, I mean, to some degree, I think the additional benefit here of bringing in some market structure here is that if the Elliott is unclear, you don't go, well, I guess I can't trade it. Well, of course, that's never the idea, right? As I've been saying for 5 years, Elliott is third on the list of priorities of how we at TDU analyze the markets. Geometry, fib swings, then the Elliott. Now, all we're doing here is actually I'm putting one in addition to that, and the question is iffy as to what would lead there. Market structure, fib swings, geometry, Elliott wave, right? That's probably how I think we'll work with this now foursome going forward. So here it is, no Elliott. Right? Can we trade it? Sure, why not? The Elliott is a little confusing. We're going to look at the Elliott in a second, but okay, well, here's demand, tapped. Here's supply, tapped. It's not hard to spot that. Okay, right. Now, again, let's keep it simple. Swing, higher, low. Higher, high, higher, low. Higher, high, right? Unless I take out this low, right? No. And just swing structure, right? So you don't want to say, oh, well, looking at this, I'm certain we're going to break this low and that this is going to be a bear trend. Certainty in the market is a way to get in trouble. Okay, if you think that, well, you might anticipate that, and you might structure some trades for it. So, for example, if you thought that we're going to break this low for sure, well, as we're right here, again, there's only so many things that can happen here, right? 2. We either go external or we stay internal and we go external down here. That's it. That's all that can happen. So your thought might be, well, maybe I don't want to sell it here right yet. I wait for a little pullback here so I can get Why would you wait for the pullback? Because your risk is lower and your return is higher. Duh. That's what people say. Oh, what kind of trader are you? I'm a retracement trader. I've been saying that for 5 years. Things I never, under any conditions, do, ever, right? Only because I've done it many times, right? I never, ever, ever buy breakouts. Because if you just apply a little bit of swing structure, if I get a break of structure here, that probably was, right? At least a change of character, right? So there's the break. What is it we can reliably anticipate after a major break of structure? Retrace. Where's the opportunity? So if I'm going to be a buyer here, do I want to buy here? Or do I want to buy up here, right? This is what retail never gets their head completely around. Again, part of the advantages of market structure here, we get a discount and a premium, right? So if you maintain a discipline to where you're only going to, come out of here, where we're only going to buy in the discount and sell in the premium, you've just made a massive improvement in your trading. You're going to have fewer trades, which if you're trading for the dopamine hit, it may be a bummer. But if you're trading to make money, so let's see. So if I'm a retracement trader, I've got lower risk and higher reward. And if I'm a breakout trader, I've got who knows how high, but much more risk, because if you're taking the breakout here, where's your stop? Here. Or you're just using a random number. Now you're not using the market. You're not looking at the market saying, oh, well, okay, it's reasonable here. Here's the structure. If I take that out, okay, well, then likely I'm wrong. But what's your forecast here for where it's going to go? Right? You can't really do an intelligent risk reward there. You can do kind of a hopium risk reward. Well, I hope it goes up to the prior high. I hope it does. If you're a retracement, shit, it's happening right here, right? If you're a retracement trader, let's say I'm going to buy it right here. My target is the swing high. Well, now where's my stop going to be? Well, if I'm buying it right here, I'm going to take advantage of this demand zone here. If it breaks it, so what have I got there? 8.17 to 1. Okay, is it completely crushing my soul if I get stopped out there? Probably not. How about this one? Same thing. Can I take it there? Right, that's the strong. Right, now I've got 6.24 to 1. Right, little more risk. Right, so I've got to change my sizing, perhaps reduce the leverage, whatever it may be. Right, is it a soul crusher if I get stopped out? No. If I do this, right, soul crusher, yeah. I mean, you're in complete control of where your stop is. Right, why would you ever do that? Yet people do. Yeah, amazingly, people do it every day. Right, I could do it down here. Right, if it breaks this low, we have a change of trend. Right, so now I'm still here, 17 to 1. If I get stopped out, right, does my world explode? No. If I make it, if I get a hit here, that's going to do some good things to my account P&L. Each one of these, again, if you're reviewing your trades at the end of the week, month, year, whatever day, whatever it may be, are you going to feel like an idiot if you get stopped out there? God, what the hell was I thinking buying at a discount here at a demand zone? What in the hell was I thinking? How about down here? Same thing. What was I thinking? How about down here? What in the hell was I thinking? Well, if it keeps coming down, see, you could punish yourself and say, oh my God, look at this thing. It all got stopped out. What the hell was I thinking? So when it gets down, let's say that happens and it gets down here. You going to take that one? You just took 3 losers in a row. Now, if they're 1-2% of your account, God, I hope you take that one. Because if you don't, that's a mistake, right? What does the market do to mistakes, right? Right, that's what'll happen, right? Because that's the one you don't take. Why don't you take it? Because you took 3 in a row here, 3 losers in a row. So you're a little gun shy down here. But you see, if it's just another trade to you, and you've got your math in alignment here to where it's not going to hurt me, not going to hurt me. That's it, like boxing. That's a jab. That's a jab. That's a jab. You're gonna get in. You're getting in the ring. You're gonna get hit. You can't take 3 jabs. You get in the boxing ring. You can't take 3 jabs. You better get out. You better put the gloves down. Pick up another sport. I mean, it seems silly to say it this way, but this is exactly what happens. Right? How do I know this? Right? Again, broker for 10 years, worked with hundreds of clients. Right? I see them do it. I've been an educator for 5 years. Right? People write me all the time. I blew my account. I didn't want to get stopped out. I mean, they write me on a pretty regular basis. Well, okay, what were you doing? What are the last 3 trades you took? You know, and I see stuff like, oh my God. Right, it's all about, oh, look how much I could have made. Right, that's what I hear. But God, I was, you know, Doge looked like it was going to fly, and Elon was buying it. Shit, it looked like I could really make a fortune. It's not the way to survive in here. You can't be afraid of it. You can't trade with fear. Right, you can't be scared. But you got to respect how quickly it can take. Right, so stops. Good idea. Unless, right, I many times if I'm buying spot, I buy without a stop because I have no interest in ever selling it. And that's not everything. That's a couple of majors here. Okay, let me keep moving here. I feel like I'm rambling too long today. All right. Trying to make some points here. Let's get the Elliott count on this. Okay, so market structure, pretty clear what we're doing. Well, let's try group 1 here. Okay. All right, so now note I've not taken the market structure off, right? So you see, right, how it plays so nicely. Okay, right? Could we got a candidate here for a 1? It's a little wacky into this. 1, 2, 3, 4, 5, 1. A, B, C, 2, 1. This gets a little tricky down here because there's an impulse, so you have to truncate here, which I do only because there's no other way to solve it, at least that I can see. 1, 2, 3, 4. Oh, 1, 2, 3, 4. Length of the 1 through the 3, right? I'm checking both here, so, right? So let's get you here. Right, so here, if this is the 2, look, if that's the 2, well, here I can do it this way. You tell me whether this algo is influential in the market, right? So not only, so we're tagging both the golden zone and the 50 to the tick. What's the result of that? How do we know it's an algo? Right? Boom. Right, now it keeps going. Right, but there's the reaction at those targets. Right, that's how we know. It's not this. It's this. That's how we know. Right, it keeps going. Okay, so were you a buyer there? It's hard. Right. See, the thing that it makes this hard is that it's coming down. So your emotion, it's like, Jesus, I can't. What do you mean buy it? It's coming straight down. That's a falling knife. I'm not going to buy that. Well, what would you have thought there? Right? If you're not comfortable with that, oh, I'll wait for the 2. Right? It doesn't happen. Right? You got to boo. Is this a 2? Boy, that's a mighty skinny little 2 there. Go down to a lower time frame here. Let's just do it. Let's go to an hourly. Was there a trade there? Could you? Oh shit! Am I going to be able to get that? Here we go. Was there a little pullback there? Let's just take a look at it. See if you could have done it. Could you have done it? I mean, I've shown this so many times that after a while, I'm like, oh God, man, they're going to be so tired of this. But if you're here, if you're watching this to improve your technical skills, I don't know what I'm kind of out of things to say about it, right? I mean, I've shown it so many times. I mean, it's to the tick. I'm running out of things to say, right? I mean, I just show it over. I just keep showing it to you over and over and over again. Look, golden zone, golden zone. You see, right? It's just nonstop, right? That's just nonstop. Golden zone, golden. It's all the market does, right? It's because at the end of the day, what's the only thing the market can do? Internal, external. When we get right here, that is the essence of trading right there. It's just, that is it. That's all there is. It's as simple as that. So when I get here, when this happens, how about that for a free draw? When I get right, oh, maybe I missed it. No, I didn't. Okay, when I get there, we're trying to get that perfect. Is this confusing? I'm assuming it can't be, right? So you say, well, wait a minute, man. But you always tell me that for every one that breaks, there's one that fails. Yeah, that's right. Because here's the conundrum. Here's the trader's conundrum. Which one? Which one? Which one? So you see, okay, man, you've shown me this golden zone thing 1,000 times. Okay, well, how do I know which one? Right? Isn't that ultimately what we're always looking at? Because when it's coming down here, what are you thinking? Oh, they're going to get that low for sure. When it's right here, that's what you're thinking. Right? You could go here. Oh shit. You could go here. You're still internal to this, and then do this. But you don't have an algo here. Right? Now, it could be an order block here, right? But the odds start to reduce, right? Maybe there's an order block here that led to a break of structure. You start putting some things together. That's all we get, right? That's all we can do. So thus, the reason I've been emphasizing the market structure so much is because it gives me a little bit of an increase in probability here. Oh, well, if we get here and I'm wondering, shit, what do we do here? Is it this one or is it the other one? Well, what's the context? Where are we coming from? Is this a 5 that completes down here and I'm thinking 1, 2? Is it a 5 that completes and I'm thinking A, B, C? Is this a series of higher highs and higher lows to where I can say with certainty here that I have a high? That's not what I want. That I have a high up here, right? That has led to a break of structure. So let's do it this way. Come here. All right, so come here. I've had a push down here that's given me a break of structure. Let's just do it this way here, right? So we had a break of structure right here, major break of structure. Okay, we break structure. What's the anticipation after that? What's the anticipation? Right, that we're going to retrace. Now, we could break the golden zone here. We could break the golden zone on this side. We could break and go right up to, if this was, right? Maybe we had some fair value gaps. They were here. This is a good pivot here. We get some fair value gaps here. Let's put that in something clean, just neutral here. Oh, so here's a supply, right? Money has to be committed to get that break of structure. It has to commit, right? There's a little imbalance here. Starts to move pretty quickly. We come back to it right here. So what do we have here? This is what's called inducement, right? So we get, hey, I got a pivot here. What's behind that? Every pivot. What's behind every pivot, right? Liquidity. So you say, oh, what's happening here? They're just running the stops here to get up to the supply zone that's up here, right? As long as we don't take out the strong pivot up here that did its job, that gave me the break of structure here, I know I want to be looking for the bear side. So my expectation is that we can go right up to the pivot, but the strong pivot up here is going to hold until it breaks. And then we have a change of trend. So even though here there's no certainty, at least, again, think of it in terms of the range, discount, and premium. Let's do it this way, right? If I'm a seller up here, at least I'm selling it at the premium. If I'm a buyer down here, I'm buying in the discount, right? We're trying to just, okay, boy, that Elliott can be so confusing and complicated, and sometimes it's there and sometimes it's not. I'm like, shit, man, it's too hard. Okay, well, I'm sympathetic to that, right? And certainly I can recognize the trends in the market, right? And the new young traders, they're not as interested in Elliott, right? They love this market structure, right? Because it's not that it's easy, but it's easier, much less to memorize, right? So you don't see a lot of the new up-and-coming Elliott Wave traders. It's like the new up-and-coming handball traders, right? They don't exist, right? So Elliott certainly has its place in TA history and lore, and there are plenty of Elliottians out there. It's not where the younger traders are going, right? Which is why you see me introducing more of this, because that's what the market is asking for. Again, I would show you 1,000 ways that they can be combined right on top of each other. But the idea is, can I simplify this whole process? Can it give me some clue? Well, if that's the strong high, right, this is the one I want. I want to sell this. What's the risk reward going to be there? Oh, come here, right? If I sell it up here, right, you see this, right? If that's my target, right? Oh God, it's coming all the way right up to the supply zone. Oh my God, maybe I can get into that trade and get a 10-to-1 winner off. What if I get stopped out? Oh, right? Does your life end? Oh well, yeah. I'm being silly, but unless you did something like this, right? It should again. It's a jab, right? It's just a jab. All right, I've kind of gone on to a bit long here. It's funny, some days I have nothing to say, or I don't know what I'm going to say, and I end up being the most long-winded. Okay, so with ETH, I think it's much like, oh shit, here, we'll get to the NASDAQ in a second. Let me finish up on ETH here. Oh, geez, I went off on a whole tangent there. Let's get back here. Let's get back to a daily. All right, where are we? What are we doing? So here's that last pivot that we just looked at. All those targets are met. All of that is met. Oh, come here. Get out of there. Get out of there. Okay, what are we doing up here? This is my little drawing session I just did. I know there's a way to, like, how do you do that? I think there's a way to, like, do this. No, there's a way to erase them all. I don't know how to do it. I can't remember how to do it. Get out of there. Get out of there. Okay. Could this be, could we have this, right? Which is, I think, a reasonable alternate. 1, 2, right? Here's our 2. 1, 2. I don't like that 2, but that's what's there. 4, 5, right? So could this be 1? And we're going to go A, B, C, W, A, B, C, X, A, B, C. Looks like we could be heading lower. What's down here? Liquidity, right? Why? Because there's a pivot, right? You see how saying just like there was liquidity here, they sweep the liquidity, up we go. What's over here? Do you see that blue line? That's the Sonar Labs drawing that for me, right? So I can see that liquid. Oh, what's up here? It's not like I needed it, right? Is this hard to deduce that there's liquidity here? There's a supply zone right here. What's right here? What do? They run the liquidity up here into the demand, into the supply zone. Down we go. Okay, so 1, 2, 1, 2, right? I mean, this is a little bit cleaner. Still, you could still do 3, 4, 5 over here, but I think this is that's such sloppy Elliott there that I'm more inclined to think, okay, there's the 1. Okay, well, that's the 1. All right, what do we got? All right, if that's the 1, where are we looking for it? If this is going to go W, X, Y. This is worth noting. All right, we don't get pivot here. So we had a perfect algo participation here right in the pocket. Oh, shit, no, wait, that doesn't matter. I think this was perfect as well. There's Waldo right there. Okay, so we come back here. We don't quite get to it. We just tap this little supply zone here. Swing down, retrace. Golden zone. Back. What are we doing here? Probably tapping that little supply zone down. Now we're coming back the other direction. Now look where we are. Do you guys see that? Do you see how this is just, this algo is just over and over and over again? So look here. Now look here. I was saying, I mean, I was going off on this on the live stream this week. How, I mean, again, I'm sure I've shown it at least 50,000 times. How, having seen that, if you've watched me for more than 10 videos, right, which I may have your last one here, I'm rambling. If you've seen that, here, these are not in the general vicinity. These are in the golden zone. How could that not be the first thing you do? I don't understand. Like, how could you not be doing any technical analysis at all in any asset and not have that be the first thing you're checking? Seriously, I don't get it. I don't get it. I don't understand how that wouldn't be the first thing. Maybe that is the first thing you're doing. Shit, I wonder if it's in the WXY. You see that? It's just, I mean, if you aren't going, holy shit, I got to put that on everything. I got to check everything. I don't know how to help you. I mean, all I can do is just keep showing it to you until you finally go, oh shit, well, I'm right in that golden zone. I think I'm going to take that one. Yeah, this remains to be seen what happens down here, right? We can see, we know we've got a swing structure here again. We've got come here. We've got the completed impulse, right? Are we going to stay internal? Right, via WXY, we're going to stay internal and then start to go. Well, bull's delight. We're going to break lower, right? It's a swing. We're going to go external down here. Again, it's all the market can do. All right, let's keep going here. Let me do. Let's do Amazon first, right? So again, do you think this thing is in Amazon? Oh, pardon me. This is ETH. Excuse me. Let's get Amazon's what I wanted here. Okay, so. this gets a little tricky here because this is the high here. I think you've got to go to make this fly here. I think you got to go A, B, C into a W, A, B, C into an X, A, B, C into a Y. Now, again, just again, sooner or later, right, you're just going to have to accept it, right? So here's the swing, here's the low. What do we do? Look at the target, right? From here, right? There's the target. Right there. Now, when this is screaming up like this, hard to take, right? Hard to take. What's there? Order block, supply zone, right? At a golden zone. What would your risk have been there? 10 cents? I mean, you could have put on a 1,000 lot there. I mean, assuming you had the capital to do it, and taken 0.5% of risk. That's why we love the golden zone. Not to mention how it's just, I mean, there is, I don't know, you got something you can show me that hits more than that? I'm going to guess not. All right, so WXY, well, 1, 2, right? Now we go deep here. We blow through the golden zone down here, right? So it's not every pivot is not going to be there, but certainly major pivots you want to pay attention to. 1, 2. Okay, so let's get this one out of here. Let's get all this, oh, right, made that, oh shit. Made that point. Okay, if this is going to go 1, 2, well, here's the 1, here's the 2. We're projecting up for the 3. Where's the high probability location for a 3? Right here. Between the 1, 6, 1, 8, you can't, here, let's see if I take this off. I take that off, right? So here's the projection for the 3. 1, 2, well, seems reasonable to project the high probability location for a 3 right here. 140, 155, between the 161.8, 175. There's my 3. Okay, well, of course, I want to be mindful of where we would be relative to, I just showed you this, the algo here. Well, what else might be there? Well, you'd certainly want to check from this. But I'd also want to check from the absolute high. Now, if we're going to go 3, it's one or the other, right? You'd have to check both, right? I'd check all of them, right? So this is the most current one. So you'd have to be considering this one. Okay, to get to the 1618, we're going to have to break this golden zone from this pivot that we know they used, right? So if I pull it up here, right? So here, this actually goes through by a tick. If I get right on that pivot high, right? We get just a squirt through, right? Obviously, they stayed with it. It's just wick, by the way. Get there. We know that's a perfect golden zone. I just showed you that. Now, as we're coming back here, I'd be mindful of what we have here. So we have a little pocket here, right? So this is Amazon, right? If anything, right? Giving a sense of consumer behavior, right? If we stay strong here, right? Likely the bull continues. Well, we're coming right into a pocket here where we'd have the 1618, 175, and the golden zone from the high. You could certainly see how that's a reasonable spot that might lead to your 4 before we go back, right? Can we break the big one? That's from the high, right? Can we break that one? Well, let's say we do break it. We break it, right? This would be, let's just get these out of here. Right, everybody's out. Right, so what would we have here? Right. We'd have now a new range, right? This would be our range. This would be the low that did its job, gave me a break here. I got a break here, right? So this is the strong low, did its job, gave me a break of structure. Now if I pull down here and I come back here, now I'm breaking again. So this becomes the strong low. What would I have in here, right? So this would be the start of the 4. These things work together so nicely. Oh, right. So we'd have a little change of character, right? A, B, right? We break the B or break the A. That's the change of character that tells us the retracement is underway. Now we come back, break of structure. You see how Elliott and market structure play so nicely together? If I'm coming up for this 5 up here, what would I be mindful of, right? Well, there's an order block sitting right there. Supply zone, pardon me. Sell zone, right? So here right off of this here. So if we get 1, 2, 3, 4, 5, right? Do you see how this? Oh boy! Now I'm right here. it's easy to fill that in your mind's eye, right? Which is not a bad thought, right? So you want to visualize the trades that you're looking for, right? So we do something like this. Let's get the wave 4 on here. Oh, to a 38. Little change of character, a little internal, right? We got to get a little downtrend to give us the 2 and the 4 before we go back to uptrend, which is the break of structure. What's after the break of structure? What are we anticipating after the break of structure? Retrace, which might be the A of the larger retrace. Right, now we got a big one. Right, you see how it all kind of plays together? All right, that's I think there's nothing to do here. You're way too late for this, right? So you got to wait until we get up here, take a little retrace, looking for the 4 to the 5. That's the next trade here. Be interesting to see if it can get through this as well. All right, we got another one right here, right? So reasonable spot where you might anticipate the 3. Now we start to put some concepts together. Come here. All right, so we think here, 1, 2. Look, right? You see how it all. No, I'm not making this shit up, right? I mean, I'm just laying it on top of each other for you, right? Now we're not here yet. I don't have this 3, but boy, that sure looks promising. Last one. All right, I got it done here. Jeez, I thought I was going to have nothing to say. Okay, let's go. It's funny how that happens. All right, so here's the NASDAQ, which is the raging bull on the planet. It's a little, the count is a little bit tricky as well in that I mean, there's no question right here that we've had a trend change here. So you got to work backwards here. Well, here's a 5, right? So I got to work backwards. Okay, well, here's the ending 5 and here's the starting 5, right? So I got to work backwards in terms of having my Elliott hat on. I got to work backwards. Oh, 5, 3, 5. I can do a 3 here. Now, I got a 5 here. So I got to do A, B, right? Because here's a 3 that I have to account for. Here's a 1, 2, 3, 4, 5, right? So here, if I label this, right? We start and we end with 5s, right? That's the cornerstone of Elliott, right? Okay, so there's the 5, A, B, right? I don't take out the high, C, right? 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5. A, B, C. 1, 2, 3. Right? You see, not to be silly about it, but 5s and 3s, right? That is the genius of Elliott. That's all we're looking for, 5s and 3s. Now, those 5s and 3s can take on different characteristics, right? And there's a lot of complexity in the 3s. That's where all the challenge is in the 3s. The 5s are easy. Okay, well, so I end with a 5. Now, I start with a 5. Well, then this is a tricky little 3, right? Because it looks like it's just straight down. But once I'm here and I get this break of structure, right? So I know I have a swing low here that's done a job, right? It's taken, because remember, right? It's always this. Here was the last swing. Here's the internal retracement. We're trying to go external. They can't do it. Oh, change of trend, right? That's how it works, right? That's how they work together. Okay, well, I've got this nice set of median lines here. So from the corner here, if this is a leading diag, so we get this little contracting diag here into a 1, 2, right? So once I have this, now I've got the framing for my median lines. Okay, well, 1, 2 looks like a WXY here. Oh, it's a 3, 3, 5. It doesn't matter, right? It's a 3, right? At the end of the day, it's the correction. What do they do down here, right? They sweep the lows, right? Do you see what they did down here, right? So there's the stop hunt. I mean, Sonar Labs even puts it in there, stop hunt, right? It tells you right? If it wasn't obvious to you what happened down here, WXY, right? They swept the lows, ran the stops. What was under here at the W? Right, liquidity, right? How do I know what happened? Right, look what came off of it. Fair value gaps, imbalances. It's just ripping, right? So this is a stop grab. This is a liquidity grab. Run the stops, rip it up. All right, let's pull back, right? So let's see if we can make sense of this one. Okay, so 1, 2, 1, 2. Oh, I've got that's again high low, which I like to use here. Well, see, I can take it off here so I don't confuse you here. Right, so we'll take that off. All right, so 1, 2, 1, 2, 1, 2, 3. Looks like A, B, C into the 4. We're charging up for that 5. Okay, so let's think about where we're going. Well, here's the obvious supply here. These are the all-time highs in the NASDAQ, right? We damn near got everything we gave back once they started raising rates. Damn near got it all back, amazingly. So 1, 2, 1, 2. Okay, well, let's do a little projecting. Oh, shit, do I have these? I might have these. Oh, maybe not. Okay, I thought I had broken those down. Okay, let's get rid of that. Okay, 1, 2. Let's just do a little projecting here. So let's do 1, right? This is just standard ops, right? This is, you do this every time, right? Look right here. So I mean, a major wave 3, right? To get 2618 is huge, right? Well, the implication here is that we're going to go 2618. We might hit the 3 of the 3 here, but we could actually keep going here. But you might think twice there, because look now. So now I go, well, there's the first 1, 2, but then that's not my 3, so I get another 1, 2. Okay, now look at this. All right, what's right here? Here's the 1618, 175. I'm going to change that color just to be neutral about it. Oh, let's go to blue. Okay, so here's the 1618, 175. Here's the 2618 of the first swing. Here's the second swing. Boy, that's a, and then look over here. I've got a supply zone. Boy, talk about a potential confluence here. I've got a sliding parallel here on the median lines that were framed here. Boy, you can sure see, all right, and I've got a demand zone down here that triggered all of this, right, that broke the structure here. So I'm going up here. I'm not saying short it here. I'm saying I sure as hell wouldn't buy it here. I know, which seems like, oh, you got to be kidding me, right? The Nasdaq's just on a raging tear. Well, here's a little softness today. What did we hit today? 1618, right? So if we start to get a little soft, right, market's been just on an unbelievable rager, right? Something like that pops in the 4. All right, it would be, I take you back to, okay, you're reviewing your trades, day, month, year, whatever it may be. Let's use the upper target, right? If you took it here, oh, that's good, 7.8 to 1. You're reviewing your trades. You're going to feel like a complete idiot taking that trade? Only if you did this, which I know you're not going to do, right? You're not going to do that. So now we go here, 7.85 to 1. The prior 3, 4, common area of support, right? But what's there? Demand zone, fair value gap. So it's just, see, the market structure and the nuances of market structure, the fair value gaps, the order blocks, all that stuff. It's just giving you a little bit more confluence points. A few more, I should say it that way, a few more confluence points to add into it, right? So already I've got the geometry here. Now I've got an Elliott count. Now I'm adding the fib structure. Measured moves, volume profile, right? I mean, you're stacking it as much as you possibly can. It still doesn't mean you might not, you could easily get stopped out there, easily. Well, let's put it back. All right. Oh, I've got it here from 2 to, let's see. From 2 through 3, right? Again, let's assume we get that for our 3. Let's go, by 4. Anything in here. Here's the 38 and the 50, right? Anything. Well, here's the high probability zone, 23 and 38, right? Right there, right? So if you're a buyer here, target for the 5, right? Now that would be the 5. Look at this. Here's the 2618 of the internal, right? So this would be 3, 4. Boy, you're going for a big one here in the NQ, right? This is game on, right? You're going for the big 2618 up here. Now, that would be relative to this one. Let's just stack it just one more time. That's all we're trying to do is stack confluence here. Now, I do not have this, but let's just assume we get the 38. Well, here's 100, right? Very common at the order block. We go further. Here's the 127, 138, right? Right on top of the 1618. Boy, talk about a good internal, right? Can you see that happening for NQ? I do. Here are the big tests, right? Here's the all-time high, right? We got supply up there. We know we've got right? We know we've got supply up there. I know this is a lot of shit on the chart. I know some people say, God, man, you got so much shit on your chart, I can't see it. Well, that's why I was trying to keep all this stuff just as simple as I can. If I take all this off and just give you the market structure. Oops, didn't mean to do all that. Give you the market structure. There's Sonar Labs back on. Why would you bet against that? Given this, right? Given all of this, right? Is anybody? That's not in dispute as to whether we have an impulse. Well, so what's the? We're back to where we started, right? We have an impulse. Here's the low, right? Here's the low, right here, right? Here's the low. Let's get this out of here. Right here's our wave 2. Here's our lowest low. 1, 2, 1, 2, 3, 4, 5. Why would you not take that? Oh, I heard on CNBC that we're going into a recession. So I'm not taking that trade. And again, I take you back to the outcome doesn't matter, right? If it's a valid technical trade and you set it up with the right risk reward, the outcome almost doesn't. Yeah, you want to see it. You want it to go. But if you just continually do this, if you're consistent and you don't, think, I got stopped out a couple, so I didn't take that one. That's the one that goes. All right, guys, I got to wrap it up there. Oh God. I seriously thought this was going to be one of the shortest videos I've ever done. I know it got way too long there. Okay, hope you stuck with me. I'm sure that's a long, oh shit. Probably lost half of you. Anyway, well, there's lots to dig into there if you're interested, right? Of course, you can always join us in our Discord. Right? We've got to, changed our pricing to make it much easier for you to participate with us in the Discord, and the belt system. The belt courses are now, you can buy them individually. So it's up to you. If you want to develop these kind of skills, work on some market structure. Well, if you want a little help on market structure, again, we recommend Sonar Labs, right? They've got a lot of their own training as well. Much of that is very FX focused, but can be applied to any asset. Okay, guys, have a good one. We'll catch you next week.